Everyone talks about finding the next winning stock, the next big investment, or the perfect time to buy. But today, I'd like to ask something different. If someone had little money, average knowledge, and no insider advantage, why would you say that time is still an investor's greatest asset?
That's a great question because it flips investing on its head. Most people think investing is about money, but it isn't. Money is just the fuel. Time is the engine. Think about planting a mango tree. You don't dig it up every week to see if it's growing. You water it, protect it, and trust the process. Investing works the same way. Yet we live in a world that rewards speed. We expect next-day delivery, instant messages, and overnight success. Naturally, we carry that impatience into investing, and that's where many people lose. The biggest fortunes in history weren't built because someone guessed tomorrow's stock price. They were built because someone gave great businesses years, even decades to grow. Warren Buffett often says his favorite holding period is forever. That isn't just a strategy, it's a mindset. Here's something fascinating about investor psychology. The market doesn't simply test your intelligence, it tests your emotions. Fear tells you to sell when prices fall. Greed tells you to chase whatever everyone else is buying. Impatience convinces you that nothing is happening because your portfolio hasn't doubled in 6 months. But time quietly rewards those who can ignore the noise. Compounding is often described as earning interest on interest, but I think that's only part of the story. Time compounds your experience. Every market cycle teaches you something. It compounds your discipline because every decision to stay invested strengthens your habits. It even compounds your confidence because you've seen storms before and know they eventually pass. Imagine two investors. One spends every day chasing trends, constantly buying and selling. The other invests consistently every month into quality assets and goes back to living life. 10 or 20 years later, people will probably call the second investor lucky, but what they're really seeing is the invisible power of time. History has shown this repeatedly. Markets experience crashes, recessions, political uncertainty, and global crises. Yet, over long periods, patient investors have generally been rewarded because innovation, productivity, and human progress continue moving forward. Time allows those forces to work on your behalf. There's another reason time matters that people rarely discuss. It reduces the cost of mistakes. A poor investment made at 25 can become a valuable lesson by 45. But delaying investing until 45 leaves far less room for recovery or compounding. Starting early isn't about having more money, it's about giving your future more chances to win. If you want financial freedom, stop asking, "What's the hottest investment today?" Instead, ask, "What decision will I still be grateful for 20 years from now?" That single question changes everything. The greatest investors don't beat time, they partner with it. They understand that wealth isn't usually built in dramatic moments, but in quiet years of consistency, patience, and discipline that almost nobody applauds while they're happening. So remember this: the market pays those who can wait longer than it rewards those who can predict.
What a powerful perspective. Time isn't something investors spend, it's something they invest. If this conversation made you rethink the way you approach wealth, don't forget to like, subscribe, and share it with someone who needs this reminder. Until next time, keep learning, keep investing, and remember, the best investment journey begins with patience.